This week's episode 153 of the Lumber Word. We're live on the 22nd, 2026. Greg, Matt, Charles. We have all of our tech working now. Thanks, Dave. We should be sounding a lot better. And we're ready to rock. So, great week so far. Interesting week. I've heard Here's what I've heard so far. I sent a couple emails out to you guys yesterday. It kind of summed up the market that I'm seeing in this lumber sphere, where got the same inquiry that I got Monday from a guy. I'm like, hey, what is up with this? This is the same inquiry you sent me Monday. And he basically sent back, yes, I know it is, and it's frustrating because my customer thinks he can buy it cheaper. Right. And I'm seeing a lot of that. I'm also hearing from people that sit in kind of the seats that we sit in, how they've had like the worst 6 months of their careers. And I'm like, I haven't had that experience. So, my feeling is we went into last year and there was a lot of, well, like I say, and a lot of Charles, like you touched on this, and Matt, you touched on this, and Greg at the end of last year, how we like to call it bad business being taken for Q1. And I kind of blow it off and think that that's not the case, but looks like it may have been the case in some different forms, if that makes sense. So we've seen a good escalation in price in spruce, in pine. Everything has participated. We finally got coastal hem fir going back to where it should be at in 2x4. So everything is moving along. So who wants to go on the Charles? Let's start with you on southern yellow pine first of all, since I think pine kind of came out of the gate before anything else did, but 60 days ago, right?
100%. It moved first. I think it's going to give the first head shake too. I don't think we're going to see a crash. I think we're going to give, I think the market as a whole, based on what happened over the past 6 to 8 weeks, is going to have a natural kind of reaction to the expediency of the escalation and pricing, right? Natural pullback, natural settling. I'm not saying, things are going to crash $150, but something's got to give. I mean, when you're selling 2 to 6, 16, number 2 southern yellow pine with a 5 handle delivered in the Southeast, a lot of people get a lot of pop.
Yeah, and a lot of people up north
they're used to buying that Euro. Exactly, because it's completely out of the price realm.
Yeah.
So then that's less demand and less pull in tertiary markets, which creates a little bit more availability, so to speak. But as always, and I think we beat a dead horse, but I mean, demand is going to be the elephant in the room, and follow through. Really, I don't think we're in an oversupplied market and things crash, but I think you have a normalization. I mean, pine moved $160 on average in 8 weeks. I mean, that's crazy.
Yeah, and that kind of got through all those different, except for like some of the 2x12, some of the wide stuff, right?
Yep.
Where's it at today? Where's it trading at? If I looked at the price today, yesterday print was, can I buy random lengths? And we could have a philosophical question about what random lengths means, but could I buy random lengths out of the East at 480 right now on a good 8 to 16 tally, like a 22333?
No. Well, maybe. I don't. Yeah. I mean, 16s are, trading 4-inch 16s are. Yeah, that's probably, you're 480, 475. You're probably right. I mean,
okay.
Print, there's mills that want, $5 to $10 premiums, but I mean, the insane or the recognized premiums that were 30 to $40 and happened in 2 days, that ship has kind of sailed.
Gotcha. And then have treaters stepped in to buy anything this year so far, or is this what's leading some of this?
Nope.
So are they going
People
to?
are chasing, and I think a lot of big single family guys wanted to lock in Q1. Okay. And they'd rather lock in, instead of locking in 60 days like they did last year, I think they want to lock in 90 days. Because if you anticipate the treater to step in, you're going to have a very small window at a point to where you're going to buy value between now and when that happens in the second or third week in February. So you may as well buy a little bit more at existing prices because it just stay in it every day, I guess, really.
Yeah. Well, I mean, one of the things that's that's really different so far this year that I see is how the demand on the commercial slash multifamily business. And I mean, I've had multiple reports. Shout out to the one that's from this morning, about how much business had been taken, not just in the fourth quarter for, the Feb, March, April start, but how much business has been taken so far this year for April, May, June, July. I mean, I just got an inquiry over my desk a few minutes ago, April to June ship on, a pile of wood. And that's different from last year. We didn't see that. I mean, we saw where multifamily last year was, I think it ended up, well, I take that back. We're still waiting for, I think, November housing starts. Normally we would be getting December this week, but apparently, they're still shut down over there at the Census Bureau. So, we probably, well, I have to get that update on when those releases for November and December are going to be, so we get final last year. But I'm going to say multi was up 15% last year, but that business was taken short and held short and bought in small quantities along the way, never really had any impact on the market. Whereas this year, guys are, they want to cover the job. And, I think right now you've got a lot of business that's offsides, which, normally that's going to be, any correction that we have is going to find support as guys either get to a price where they can cover their job, or they just take their medicine and buy it in. So I mean, I feel like there's a lot of underlying support to prices at this point.
Yeah, Greg, and there was no, I think you summed up that real well. I mean, there was multifamily business last year. The difference is there was no fear of buying when every day was down into the right on a pricing chart. Nobody built inventory. So what about these big multifamily people that load up the boat and put wood on the ground? Are they doing that, Charles?
To kind of parlay on what Greg said, I think big picture, he's 100% correct. There's going to be a lot of demand throughout through some of this unknown, and that price continuity is just going to continue through the rest of the year as long as we get some follow through on some of the variables that we're seeing now come to fruition. As far as people putting wood on the ground, I don't know that they're doing it right now. I mean, I think they're going to wait for an opportunity to buy, but I also think there are reloads that quite frankly don't have any space, because you also got to take into consideration panels have been so cheap for so long. There's a lot of people that went and bought hundreds of trucks of this stuff. So
I got multiple yards that we've used in the past. It's like, hey, we still have outside storage, but we don't have inside storage. But I also see a situation where, there's yards that are not taking any more lumber in. We've had to do some diverting of cars, saying, hey, we just need some breathing room because of the wood we have on the ground.
Yeah.
And like some people might interpret that as like that somehow that's negative to the market. It's not. It's because most of that wood is all committed. It's not like it's going to come back on the market.
Yeah. So Greg, on the spruce side, kind of what we're seeing, they're still the lists are okay as far as, but the big producers, I'm not seeing a lot of car lists. Some of the smaller ones are sending some stuff out. The hell am I trying to say here? There's
what you're trying to say in the Eastern market, mill order files, first or second week in February. There's, if we think about it, like mills all cleaned up all their dressed inventory in December. They've curtailed production in the first quarter. So they don't have a lot of pressure in front of them to move wood. Conversation this morning, it's like, hey, it's not that we're that busy, but we don't need to be that busy to take care of what we need to take care of every day. You know, if you're a guy that had to sell 5 million feet a day to stay even, you know, now you have to sell, you know, 2 or 3. It takes care of itself. So, and you know, at the current spruce prices, there's no increase in production coming.
No.
And that, I think the big surprise is you could move up another $50 or $100 in spruce, and there still wouldn't be any increase in production, because with no log decks and, you know, the weather where it's at, I mean, any significant increase in spruce production and supply is probably deep in the second quarter.
Well, then this will segue into what Matt. Well, it's a great summary. This will segue into Matt. Like, so we had the Blue Ridge fire last week, and our friend Tony pointed this out to me. Tony, shout out to you down in Central Illinois. Pointed this out to me last week. Did you see what Friday printed on MSR in the West? And I'm like, no, I really didn't. What did it print up? $45, $35, $25 on Western spruce MSR.
Is that a lot?
I mean, and a lot of stuff print up. So Matt, like, you deal a lot in the Western spruce market, obviously, because one, you have a mill there, but also, so what did you see over since last podcast on the Western spruce? I mean, coastal hem fir bounced. It's getting back to its normalized price. 2x6 hem fir still cheap as shit, I think. But what are you seeing?
Matt's going to talk about that right now.
It isn't cheap anymore. And I think it's harder to buy lumber in the West than it is in the East at the moment. Generally speaking, they're like I said last week and week before, they're running a heavy Doug fir log out here at most of the sawmills. So if you want to, you know, turn to the alternative, cheaper whitewood species like hemfir, spruce, SPF South, ESLP, WW, those types of things, there's just less of it being offered than there was a month ago. And the Canadians, you know, because of the reaction to the fire in Alberta and already strengthening markets coming into the January timeframe, you know, they solved all their year-end issues, and now they come in and they get whacked with a bunch of new orders, and so they've got a real order file, and they don't have as many empty cars to load. As seems like the flow of cars is more to the east right now rather than the west, and so it's harder to buy lumber out here than it has been for quite some time. I think that will probably lessen at some point here. I mean, we typically have a lull sometime in, you know, January, February. There's usually a stretch of time where there's a bit of a lull, and then we get going again. You know, I don't know, like to Greg's point about resting orders and people wanting to buy lumber, you know, that there's pent up demand. I agree with that. I think that another part of the market that I view as a positive is that there's a lot of people out there that don't believe this, right? They either refuse to believe it because they haven't had to deal with rising prices for most of the last year, really most of the last 2 years. They don't really care, right? They've already got something sold at a lower price, and they're just hoping that they can get out of that position, or their budget didn't allow for it. You know, they just, and then there's people that just get fixated on an idea. So in our business, there's people that are long and short at the same time. All four of us carry long positions and short positions concurrently. And then there's people that operate strictly from the long side. And then there's people that operate predominantly from the short side. And the people that are operating from purely the long side got smoked last year. And some of those people, it's going to be hard to get them to switch gears back to wanting to be long all the time again. You know, they took a beating last year, and it's hard to overcome that mentally. And the people that are short all the time, you're seeing their behavior. They're covering. They're trying to cover. So to me, that tells you where's the general direction of the market going to go. It's going to keep going up, and I think that this really, we're back into a normal supply and demand type market. You know, we've all been through these before. Greg's been doing it for over 30, and Ashley, you've been doing it for 30, and Charles, I don't know, 15, 20 years. I mean,
not
look,
5 anyhow.
We haven't had in the last how many times in the last 6 years have we had a normal, like evenly balanced supply and demand type market? It's been a while. We had the COVID years, and we had coming back from
evenly
that.
balanced. We don't want that, because when you're evenly balanced, that's when you get a flat market that doesn't move. We want markets that are
Well, I think we're
balance.
slightly undersupplied if you factor in the taxes on Canada, the lower production in the South. There's less euro coming over, and we still haven't reached price points yet that are super attractive to invite new production, you know, across the board. The one wild card that I'm looking at is the Canadian dollar. So this morning on the drive into work, a guy, one of those business analyst guys, says because of what Trump's doing with Greenland and what he wants to do, build an iron shield or iron dome across North America, he thinks that Canada is going to be the next place where the United States wants to put money. And he feels like the Canadian dollar is undervalued and that's going to change. So what if the Canadian dollar went back up to 90 cents on the dollar or 80 cents on the dollar? You know, it's been stuck low for quite some time. That would actually change the math a little bit for these producers. So
it wouldn't change it a little bit.
It
would change it a lot. I mean, going from whatever 72 cents to 90 cents. I mean, let's see, what does that generate in return? That's like adding another 18% tax to their price, right? I mean, that reduces their mill net by another 18%.
And then there's just things happening out there that lead me to believe that unless you can sell into the future at a premium, it's a bad order. Like, seriously, just don't do it. And until we can get, like, most people on that side of the ledger, we're going to continue to rally. People fight it. That'll come to an end at some point when, it costs them $10,000 a car.
Matt, Greg and I were talking last night, and he brought up he said he was talking to a customer who said their people in the field are still selling cheap business right now. Like,
that's the biggest no-no of all, right? So if you think about, what if you bought silver at 35? Would you sell it at 65 to all your competitors?
I did.
Would you just get rid of it?
I did that with silver.
I
mean,
nice trade, Ashley. That makes up for that Tesla.
Lumber isn't.
Yeah.
Greg said this before. Lumber is, people look at your inventory reports and your turns and your profitability and ROI and all that. And last year it was a liability, but inventory this year is not a liability; it's an asset. And so, if you operate your business as though you just bought a bunch of silver at $35 an ounce, and you can take your time selling it, right? Then I think you'll do better than if you just rush to the exits and sell it all for $38 an ounce.
Well, so, and the other thing that happens is, last year, so the field took business short consistently, and, there was no risk on that. That worked out great. And the other thing is, there's a segment of the pipeline that, sells before they own things. And that gives the appearance to the market. If somebody puts out an inquiry for something and, 10 guys come back with prices and they're super aggressive and, whatnot, that gives that, buyer the appearance that the market is maybe more oversupplied than it really is. And now you have the opposite effect. What you're going to have is more no quoting, right? And when you make the flip on, from the field not only not wanting to take it short but wanting to cover everything, then you actually give the market the appearance of greater demand than would otherwise be there. But
then you get the big sell-off at the end of it. When everybody gets long, then it's over.
Right.
But right now, we're just in the middle of it. We're still in the tug of war between the longs and the shorts, and the idea that prices will be higher or lower next week is still up in the air. I'm looking at a couple of things that maybe have nothing to do with that per se, but as long as just a general observation, as long as we're carrying these big $50, $60 premiums in the futures board, I still, that entices me to sell into it, right? As a hedger, it's just good math. It allows you to do some good basis trades too in the future. If you decide you want to turn it into cash, you can do some spreads and get long and take delivery and blah, 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 blah. But I think a guest we had on a few weeks ago said that he expected those numbers to flatten out. Well, what happens if we get into April and May and the cash price and the futures price change like they used to be for most of our careers? It's going to make it a lot trickier for people to make, long-term strategy decisions. It's easy for me to buy lumber today and sell it ahead in the board $60 higher and then take delivery of it. I've got like 60 to 90 days to figure out what to do with that lumber. And I've got a built-in $50, $60 hedge already. It allows me all kinds of flexibility, and my planning process is simple. But when I have to make snap decisions in May or June, and I'm only getting a $20 premium or a $15 premium, a lot trickier math, a lot harder buying decisions. It's going to change. It's going to change the way I do business.
One interesting thing, if you would have sold yesterday, Matt, you could have come in today and made $30 1,000 instantly if you had resting orders below.
I did actually. I just didn't have any resting orders in. It's like, so I mean, we had a flash sell off of like $40.
What was up with that?
So I mean, but like honestly,
no resting orders.
The market hit a 250 lot stop and went in a vacuum, down to $34. The next trade after it traded limit down was $15. No, well, yeah, it was $15 above that low trade price. So yeah, if you had a resting order, at limit down, you might have gotten those.
How do you feel if you're the guy that put that order in, that limit order in? Like,
you mean stop loss order?
How do you feel if you're that guy and you're like, your broker calls you back, says, "Hey, we filled you $30 below here."
I mean, the reality is, having traded this for a long time,
don't do that.
Never put a stop loss order in lumber. They will go get you every time. They're going to get you. That's what they do. It used to be some fine gentlemen standing around, talking amongst themselves. Now it's the computer. I don't know how it does it, but it does it.
Yeah. You wouldn't say people go out and hunt for orders, would you? Because you're not supposed to do that.
Strange things happen out there.
Yeah.
Strange
Well,
things.
All it does is it just creates a new target for the March contract to get back down to, right? So if you look at that 578 number as kind of major support line for March, sort of your bottom, then now you can just sort of operate. If you're a mill, that's probably the lowest you're going to have to sell it for in March. And if you're a trader, that would be a place where you want to get long, right?
Yeah.
Even though it's $50 higher than what you could have got long January for.
Yeah, my guess is you're going to be trading on the futures for the next several weeks, to your point, Matt, from perhaps low somewhere in the 580s to, in the low 600s. We're probably going to be in a trading range for a period of time unless we get another shock in the cash market on the supply side that when you look, we've lost open interest is now down from, north of 11,000. We're at 8,500 today. The kind of a low level on open interest is, somewhere in the 7,000s. So, the big issue is going to be, hey, what happens to the 5,000 of those shorts that are non-commercial, that are funds, and do they make the switch from being like short to being long? And if they do, then we're gonna get your 800 sooner rather than later, Matt.
And then does the industry make the decision to get short and get on the other side of it and that's where we flip the spread, right? Where we go we don't have the fund rolling anymore like we do.
Yeah, that. I mean, you're probably May, June, May, July expirations for all that to transpire. But yeah,
What
yeah. I mean, if you
just
think about last year, the industry was long all year. The funds were short all year, and the funds made money all last year in lumber, right?
so aren't they smart money then?
They
They always say the
they
industry
were
is, and
last
like
year. They were last
yeah.
year.
Yeah, and are we the only industry where the actual commercials aren't the smart money?
Yeah, I mean, every dog has his day. I mean,
True.
right?
I'm just asking the
Yeah,
question.
yeah, legit.
Just ask the one interesting note, I wanted to talk about. I noticed last week when we were going into expiration, the big mill that EFPs stopped EFPing a day or two early, kind of threw a lot of people into a little bit of. I think a lot of people my opinion, when they are long futures going into that last week, they think they're going to EFP with 1 mil. And I think with more participants now in the market, that's not the case. And I think that's healthy for the market. Um, Anybody else? I think it's healthy for the market because when you have more than just one person in there EFPing or doing stuff, and I'm a big promoter of that. I think there should be more people in there looking into the sun on the last week of expiration on the sell side that are willing to EFP or deliver. I mean, and that worked. That was, or people on the buy side should be prepared for that. I don't know if that was a question or a commentary.
It seemed like kind of a rambling stream of consciousness to me, but it was
It was.
okay.
It was. It's like Will Ferrell in Old School doing his dissertation on the stage, I think, where everybody says, now we're all much dumber for that. Thank you. Thank you. We're all much
That was
dumber
Billy
for that.
Madison.
Yeah,
Was it Billy Madison?
Yeah, yeah.
Okay.
May
Okay.
God have mercy on your soul.
Let's say institution, big thing that's been in the news the last few days, few weeks, institutional buying. And I always follow Lance Lambert a lot on X at News Lambert, and kind of like went through a bunch of his stuff before I got on here. I hope I'm correct on it. It looks like if you are in the BTR, build to rent part of that space, you're outside of what Trump is trying to impose things on. Does that make sense?
I don't really
Am I looking
understand.
at
I mean, does anyone understand where's the breakdown? Okay, is it 500 units? Is it 100 units? Is it the scale of the company that's doing the buying? I mean, like he puts out an executive order, which I haven't read. I'm just kind of barely cognizant of this, but I just don't get what the mechanism is and if there's any teeth behind it, if it's more like just a suggestion.
Yeah, well, I think it's a suggestion / trying to be something, but it's for anybody that's institutional buyers. I shouldn't say it's for anybody. I'll have to look at this. It's for institutions that are buying to sell, not buying to rent, right? And I'm not sure how that plays out, but I was under the impression it was even the BTR people, but it's not. So I don't think it really. I mean, I saw one of them. Maybe it was DR Horton or somebody came out and said anything that they do won't have much of an effect on them at all. So it seems to be that it's Matt,
like a look squirrel thing.
Yeah.
I'm trying to do something. Let's make some noise.
Yeah.
Somebody sent me some hard data on mortgage applications and refis here recently. They've been going up. So that signals a little bit stronger demand in single family going forward, which I guess we could all root for. What's going to take to get mortgage rates down around 5 or 4.9 or 5.1? What do we have to do to get there? And do we want to get there?
I mean, I think we went through the list of things to help housing a few weeks ago. One is lowering mortgage rates, and the other thing that the administration came out was wanting to see if Fannie and Freddie would buy 200 billion worth of mortgage bonds to collapse that spread. You have a 4.27 10-year, and I mean, based on that, you could collapse the mortgage rates down to the mid low fives, which would be a real positive for for housing. I mean, the other thing is the housing price increases have moderated significantly, and you've got a lot of markets now that there's prices are actually down from where they were. I think nationally we're 1% up kind of thing year over year. High beta markets are down, and the lower cost markets, Midwest, Madison, Wisconsin, Terre Haute, blah blah blah. Yeah, cheers, Charles. Keep them doggies moving. Keep them doggies moving.
Well,
Y'all be good. I apologize. I'll call you in a little bit. Thank you.
yeah, one of those,
Hey,
one of
chaos
those,
creator, go create some chaos.
one of those, what Trump said something to the effect the other day of, I want to, just summarizing is what I heard, I want to help fix the affordability problem, but I don't want to have the price of any homes fall. And I'm like, okay, well, that takes out one of the three solutions to doing it. So if price of homes doesn't fall, then you need real wage increases, or you need rates to drop down to 2.5% for affordability. So we're back to the whole affordability issue again.
And affordability is going to be an issue ongoing. I mean, the best bet is, if you look at housing prices over a long time series, what tends to happen is they move up in big chunks. Ash, it's just like farmland, right? Farmland moves up a lot all at once, and then it stays at that price for like 10 years.
Yeah.
Right?
Yeah.
And that's if you look at a long-term, other than financial crisis, housing prices don't really fall, right? They move up and then they move sideways for, what seems like a long, long time. I mean, that's on a national level. It's obviously there's lots of regional dichotomies.
Yeah. Yeah, that's for sure. I just thought that was interesting, and I don't see that happening with a great big implosion of pricing either, especially since it looks like we've started to do some more QE again. And
I don't really get that. Why are we doing that?
No, there's no QE. The Fed slowed their rolling off of their balance sheet. They're not increasing the balance sheet. They're just not reducing it as much as they had. We need to get Brian Westbury in here to give us a full dissect on the Fed. That's for sure.
I saw where somebody posted one of Brian's charts and lifted it off one of his posts.
Yeah, I saw that too.
And Elon Musk reposted it after this guy did it. And Brian's like, "Hey man, how about a little gratuity for the effort here, llama?"
Yeah.
Right. And
the guy just sniped it from him. No credit given.
Totally took one of his charts, and Elon, with his 100 million followers, reposted it without giving Brian any credit.
I mean, you kind of don't you get the credit that way? I mean, you getting? I mean,
yeah. I mean,
if Elon picked up on the lumber word, I mean, we wouldn't ask for anything else, would we?
We'd have to not wear T-shirts.
All right. So
collared shirt.
Hey, just real quick, shout out. Had a gentleman call. His son reached out to me last week, said he listens to our podcast all the time, from Columbus, Ohio. Judd and his son. Judd listens with his wife sometimes. They're lumber people. So
excuse me,
you better keep it clean.
And but one of he liked listening from being in the lumber business and being on the future side before. We do speak like a certain language to a small niche market. So anybody else listening, if there's anything else you'd like us to talk about or to to speak in terms out. I'm trying to figure out how to get a bigger audience potentially, or screw it, let's just be happy with the audience we have. I mean,
Sure.
what-
Do you want to?
Can we talk about that national championship? Shout out to the Indiana fans.
Yeah.
All those years out in the wilderness. Very impressive team. And I would like to, say, hey, thanks to the Bears for a great season. We knew the Magic probably had to end at some point, but that was that was tough, man. I wish DJ.
You're a
if DJ could
Northwestern.
have just run the route.
You're a Northwestern alum, right?
They're the home team. They're the home team,
right? So Northwestern, Indiana, Oregon State all had really terrible teams in the 80s, 90s, 2000s. Now look at Indiana as a case study of what your alumni can pay for. New coach, new facilities, new players. And Northwestern's got to have plenty of money. I mean, look, that's a pretty wealthy endowment school that gives you hope, Greg. You might be hoisting a national championship here in the next 10 years.
The one thing about NIL is it's really flipped things, and it's not just if you're historical power team. If you got money, you can and it's more than just money. It's the right organization to put the right players in place. It's not just about money. I mean, that helps, but it's getting those heads. I mean, what it really hurts is it hurts the the mid-level majors where the JMUs they have a great season, and half their team's going to be gone next year. Do
you know who Oregon State's wealthiest alum is?
Matt Beamer.
Nike,
the guy that owns NVIDIA.
Oh, NVIDIA.
What if he decided he wanted to help out the Beavs? I mean, what's $10 billion to him? It'd be like flipping a $5 bill out of his pocket.
So if you think, I got a couple comments on.
So now we can do if we go sports radio also, and we get Teddy Boy to get a decent connection. I mean, we could really blow up.
So a couple things. A great win by Indiana, and they showed that you can go out and put a team together with 25 and 26-year-old 5 and 6 year players, and have a team that's basically only the same chronological age as one of the youngest NFL teams, and they did a great job doing that. And second, I think it's great, but it's almost like Moneyball, right? In a way, these teams are going to figure out now how to get the best value players. Like Indiana didn't go out and buy 4 and 5 star blue chips; they went out and bought 2 and 3 star blue chips that had developed over 3 or 4 years at 1, 2, 3 other schools, right?
Yeah.
And so
it's putting the right people together.
So when when you're putting 25-year-old players in a team playing 18, 19, and 20-year-olds, big age difference there, and kudos to them for figuring it out. Secondly, if the NIL is successful over the next 10, 15 years, and this is Clay Travis's basic thought processes, there won't be any alumni. Think about it. If you only go to a school for 1 year and you jump to 4 different schools over your whole career, in 10 or 15 years, there's going to be no alumni left to support anything. Because
that's frontier gibberish. You're talking about the players. You're not talking about the mass student body. I mean, you're talking about you're talking about a handful of players. That's not going to have any effect on. It's not going to have zero effect on your.
Look at Michigan. Michigan's alumni are players. Most of them, the most wealthy ones.
Hey, let's get back to lumber, dude.
I mean, there's
your little thing you were talking about.
On a football team, and there's 40,000 students.
Hey man, Clay Travis is like one of the smartest sports guys out there. So I'm
calling Clay out right here. Get him on the show. Let's go. Get him on the show.
Okay, lumber, Matt.
Yeah. No, well, I mean, I just look at the list of topics, and we were about to hit overvalued, undervalued. Why don't you take it away?
Yeah, so overvalued, undervalued. As I go through the spruce products, and when I look at overvalued and undervalued through our proprietary system, I sent some of them over to you last week, Matt, so you could take a look at them. And when you go through the spruce item, and when I look at undervalued, overvalued, I look at them relative to their nominal price against nothing and then against the hedge, right? So one, when you have a $60 premium on futures or a $40 premium, it even supercharges that more. So in the spruce items, I noticed, and we have bought some of these, 2x10 was a big winner, a big undervalued item continuing to move. And when you look at some of the items like 2x6, 10 footers, still undervalued, 16 footers, overvalued, 2x4, there's still some, 10s and 12s still look decent, where 16s are overvalued. You get over to your side of the world, Matt, and U.S. species, green Doug fir, 2x12 in dry Doug fir, and other items like that, undervalued, right?
Yeah. Yeah.
Southern yellow pine, like there was a lot of stuff that was, was getting up there. 2x6, I didn't see any values there, but you get 2x10, 2x12, 2x8, and 18s and 20s. There was some stuff there that potentially had $100 to $200 to $300 upside. So I see a few things out there, but 2x4 16s and 2x6 16s have been interesting, even though they're undervalued. We keep buying them because they have
overvalued
or overvalued.
Yeah,
we keep buying them and they got momentum and we're selling them. But we don't.
And the momentum trade on those is insane right now. Like I always worry about being the last guy at the table when the music turns off, and I don't want to do that right on 2x4 and 2x6 16s because those will be a target. But in the meantime, in the first month of the year, it seems like it's a safe bet. If we were in the fourth or fifth month of the year, maybe not as safe anymore, right? Yeah, it's crazy to me the demand for those at the moment.
I mean, and then once we get into when we're selling in the 700s, which we're getting close to that. It's a different ball game. They say, if you're not early, you're late.
Do you think that we'll ever get back to an industry where Greg, you're my pretend customer from 20 years ago, and I just call you up and go, "Hey, Greg, I got 5 cars at random. I want to sell you at a price. Oh yeah, let's just go ahead and do those. What's the tally going to be? I don't know. Just going to be a good random 8 to 16. I'm not even sure. It might be 8 to 20. Okay, I'll just put them in for this tally. If it's a little different, that's fine." Like those days are so over. It's like all I get inquiries for is straight cars of 12s, 14s, and 16s, straight cars of 14s, straight cars of 16s, straight cars of 10s, 8, 32 16s, 32 16s with no filler. I mean, it's like everybody wants to buy in a certain way. And the days of I'm sounding old here, but it's true. I used to just call up people and sell them random. And they didn't even really care what the tally was. They just trusted you wouldn't screw them over with some god-awful tally, right? Are we ever going to get back there?
No, probably not. I mean, once you kind of go down that road, but I mean, that's because
I see that as an opportunity for a guy that wants to start up a retail company and buy that way, to figure out how to merchandise like we all had to do back in the day. When you gotta buy a random tally, you got to figure out what to do with your 8s and 10s. You got an answer for your 12 and longer. You might cut some 18s and 20s into 16s or cut them in half into studs. You had to merchandise things. And I think a savvy retail lumberyard with a chop saw and some good calculators could make some real money doing it the old way.
Why do these customers, I'm talking the big chains, everybody, is it because they have younger buyers? Why do they all want to buy 16s? Why is that all they want to buy?
That's not driven by the buyers. That's driven by the yard.
Their sales.
It's
driven by their sales guys.
That's driven by what the customers want. What the customers want. That's what it's driven by.
Here's my theory on why that happened, because I've lived through it with specific companies, watching the behavior change over 10 years. I think the sales guys for the retail yards got in the habit of selling a guy that was their buddy some lineal footage, right? And like, okay, we'll sell you 10 trucks at X price for next month and we'll ship them to this job site for you. Okay, great. And they would just write them up as like a combination of 8 through 16 or 12 through 16, random tally. And then when the job came ready to ship, the builder would send over the release, and it would be like a straight truck of 14s or a straight truck of 16s. And then at some point in time, they just never got pushed back, and they just allowed them to ship 16s. And then that behavior got reinforced because the salesman was still getting paid, and he basically letting the customer take the best length out of the tally without getting the right price for it, but the salesman was still getting paid for it. And then the modern computer systems that people are now using for their buying and selling doesn't account for that behavior. It just lets people take 16s now. And so they never got their hands slapped. They just kept doing it. And now the buyers are forced to just buy what the customers want, which they've always wanted, straight 16s, always, right? Just
right
now they get it.
Yeah.
And it's easier if you buy straight 16s, and that's what the price is in there. You can buy random, it's a whole lot extra work to go ahead and change that from a random price to a specified price. I mean, we all can do it, but it's more work. It's just easier to do it that way. Matt, you bring a great point as to how it's more. That's the biggest surprise to me, is how more people don't, like right now, figure out, hey, look at the discount that 12s and 14s are.
Yeah.
Right. I mean, they're, and if you remember, there was a period of time not that long ago where 14s were traded at a premium to 16s, which was nuts. But
back in the day, guys used to run panel plants, and I'd sell those panel plant guys just car after car after car, undervalued 12s and 14s. It seems like even that behavior has kind of gone away. It's interesting.
I think, on 2x4s, yes, 16s have momentum, but 12s and 14s have value. And I think
Right.
whether you're a retail lumber yard or you're a truss manufacturer, and certainly if you're a multifamily, then you need to be looking. You need to be looking.
If you're a crafty builder, you're a job specker, you might start looking at some of these things, right? Like, don't just look at the random lengths prices. Look at some of the lengths that we're talking about as momentum trades.
So you basically need to work into your contracts with these. If you're a big buyer seller of selling more lineal feet on the contract, saying, hey, we have the right to ship this in lineal feet over the life of this contract, right? As long as there's not 100% eights, it's got to have, but they could set it up based on lineal feet, and then everybody could go through and pick the best value tally.
But if you're a commercial and a multifamily buyer right now, hey, tell them, hey, I want to buy 12s or I want to buy 14s, and get that price. I mean, if they just put a lineal price, then they're getting a 16-foot price, which, excuse it. I mean, unless they're saying, hey, we want lineal, and then to Matt's point, just expecting them to ship 16s. Now, the yards aren't going to do that for very long.
I'll get calls after this, and they'll be like, yeah, I listened to your podcast, but you don't
know what you're talking about.
My specific customer is special, and they need 16s because they're building a widget that just needs those. And
yeah,
I'm like,
in some cases that might be true. But if you've ever been to a job site, if you're a young trader and you've never walked a job site where they're slapping up homes and apartments, you should. You owe it to your career to go to a job site, walk around and look at all the scrap lumber of 16s that got cut in half so they could make temporary stairs. They cut them into 4-footers to make bird block. And there's a giant pile of scrapped up 2x4 16s cut to all different lengths sitting out there in front of the house, ready to go to the dump.
Yep.
So don't tell me, because I've lived it. I've seen it, and it's not true. You don't have, unless you're running a truss yard or you're making like a certain prefab wall, you don't have to have any length. You can buy random, and you can build with it.
And the truss people get it. That's why they order specific stuff, because they figure out how to make the right best lengths work.
My wife's tired of me pulling over to job sites. I mean, she just says, no, we I've seen him. I've seen it. You don't need to no, but that's my lumber over there. We're supplying that job. I got to go look at it.
Funny.
Do that on your own time, mister.
Story related to that, just real quick. My wife and I were in Milan a couple of years back, and we waited outside of that. Is it the dojo, whatever that place is where you have to wait, that church, and go in it, and you get to go up on the roof. It's built in the 14 or 1500s. I got up on the roof and they had scaffolding and they had OSB out there, and I went flying across the roof so I could get a picture of the grade stamp on the OSB. And, and my wife's like, "What are you doing?" I'm like, I just wanted to see whose OSB this was, and lumber. And so yeah, I hear that, Greg. What Mindy would empathize with Julie on that, because that's just the way that's the way it works.
So are we kind of all in agreement right now that we feel like the market has a generally positive upward trend to it for a while, and like not just for another week or two, but for some length of time here?
Seasonal strength lasts for another 30 to 75 days. No, I mean, one of the most surprising things to me, Matt, right now is the area of the country that has bad weather and the number of people that are asking me where their trucks are. I mean, I'm like, hey, it's -1 in Indianapolis. Like, what do you mean? Like, really, you need to know where this truck is right now? I mean, that's that's the crazy thing, and also the inquiry for the people that want lumber for next week. I'm like, hey, we're 2 to 3 weeks on shipping because we've that's been a real strong start to the year, and I mean, the winter weather, it's real. I mean, I'm getting all sorts of emails about, we're closed for delivery tomorrow. We're closed for delivery on Monday because of the storm. I'm like, well, I mean, and then I know what'll happen on Wednesday. They'll go, hey, where's my truck? I go, well, you were closed for.
Yeah.
Don't care. They don't care.
Yeah.
Huh.
No,
we don't. Yeah, I'm not having those experiences. We don't have snow out here. It's been sunny and cold, but sunny, dry.
I've been on the other side of that experience. I called the reload the other day, and they said there's a blizzard and a whiteout, and we can't see 50 feet in front of us. And I'm like, well, when are you getting my truck loaded? So I need to be a little bit more
today.
I need to be a little bit more kind and understanding. And Matt, we're so busy on that and can't. We were loading trucks right off a car that was sitting there.
Yeah.
And I mean, the East is going to be impacted here. I mean, sub-zero weather for the next, as far as the eye can see. We had reports from our mill that, hey, the storm's going to slow down shipments for the next, into next week. I'm waiting for, do we have, and I don't think it's going to happen because this, with production lower than it has been, probably the CN will be able to not, have significant service issues.
Well, shit, Greg, if it's -50 up in Canada like it's supposed to be, they're not going to move cars anywhere, are they? I never even thought about that.
But I will say, I mean, I still have cars that ship, in late December, mid the second, third week in December that aren't unloaded at our yards.
Yeah.
I mean,
Yeah.
I mean, that's why I look at inventory right now as an asset. And there's going to be longer lead times to get it to you because of winter weather. Logistics is an issue again. We're going to go into produce season here in the springtime at the same time that the retail, mass merchandisers want their inventories to be bulked up, for the spring season. There's a lot of positive trends going right now. I'm trying like crazy to find the negative ones. There isn't a lot of negative things out there going forward, and so
that's
I'm just going to keep writing that that feeling for until everybody starts agreeing with me and everybody has bought all their lumber and we've seen total capitulation. And then at that moment, I'll just say, okay, I'm done. I'll even talk about it on the pod. If I get to that point, sometime in the future, then I'll just say, yeah, okay, I'm out.
At one point too,
Matt
and Greg, is like, if you guys have the same feeling here, it's been plotting and slowly moving higher, which is a healthy market. Like, you're not having mills going off the market and moving up $50 on stuff. We're slowly plodding along and getting off. Mills are being smart. They're offering stuff every day to sell. And like, as Greg said early in this, it's not as much as it was, but they're offering it to people, to their customers every day, and it's getting bought. and it's slowly getting sold, and it's not a complete crazy feeding frenzy, but everything's getting moved pretty firmly.
Yep, absolutely. Well, I think we've pretty much wrapped it up for the week, and I'm gonna go grab some lunch, boys.
Good stuff.
Same
Hey,
here.
listen, have a great one, guys. Thanks.
Yeah,
Cheers.
congrats to
Thank-
Indiana.
Yep, go to Indiana.